Hello, this is Richard Murphy, and I want to talk about one of the most topical questions in tax at the moment, and that is, do we need a wealth tax? We're recording in the week that Rishi Sunak gave his summer statement, and he was asked after he gave that statement, is there a need for a wealth tax in the UK? And he said no, and he said he can never imagine a circumstance when there will be a need for a wealth tax. I'm going to disappoint those who want a wealth tax by saying, I don't think that's what we need right now, but let me explain why. In the UK at present, there's about £12.7 trillion of wealth. That doesn't mean there's £12.7 trillion of money, by the way. And of course that can't be true because the things that make up that wealth aren't all cash. There's our properties, our houses, which come to about 4.5 trillion of total wealth, or over a third of it. There's our pension funds. They're 5.4 trillion pounds worth of wealth. So the biggest part of total wealth in the UK is actually stashed in pension funds. There's around 1.2 trillion pounds of personal property. What does that mean? Well, cars, the things we have in our houses. Of course, if you're really wealthy, it might include the works of art on your wall and your expensive jewellery or whatever else, but very hard to subject to tax. And there's just 1.6 trillion pounds of leftover money, which is actually financial wealth. That's money in the bank, shares that people own, other types of financial investment, life assurance policies, for example. So if we look at that breakdown, it's going to be quite hard to charge people to a wealth tax on their homes. Politically, incredibly difficult. On second homes, maybe easier, but that's a small part of the total. It's going to be very hard to charge a wealth tax on pensions because the government's already given us tax relief to put money into pensions. And so charging a wealth tax on something that's already had tax relief is kind of strange at the very least. Again, politically hard to imagine. And taxing personal property is simply going to be very difficult because valuing it will be hard. How much is your stamp collection worth if that happens to be your passion? Well, who knows? And does HM Revenue and Customs know better? Probably not. So that's difficult. So we're down to financial wealth. But of that total of 1.6 billion of financial wealth that could be the basis for a wealth tax, £700 billion is in ISAs, individual saving accounts. And of course they're tax incentivised too. The government has said it wants people to save in ISAs. So it's again going to be very hard for the government to tax something that they've said they want people to do. That leaves just £900 billion of financial wealth, which could be the basis for a wealth tax. Now, what rate would we charge a wealth tax at? A lot of people say 1% at most. So 900 billion of wealth would give rise to a tax of £9 billion a year. Is that enough to make a significant difference to paying for the cost of coronavirus, which is expected to be £350 billion this year? My answer is, well, no, it clearly isn't. It's a lot of hassle for very little tax, and there are better options available. I'm not arguing that the richest in the UK need to pay more as a contribution to the cost that will eventually have to be paid for coronavirus to rebalancing the economy. But how should they do that? Well, my argument is that they should pay more of other taxes. So, for example, capital gains tax in the UK at the moment is charged on most things at a maximum of 20%, when income tax is at up to 45%. Why aren't the rates the same? The Tory Chancellor Nigel Lawson had the rates the same in 1990, but we haven't had that for a long time. We could do that and raise almost as much as a wealth tax. We could play with inheritance tax, although it's deeply unpopular. We could simply make it a better gifts tax and unavoidable. We could do other things. Right now, you pay a lot more tax if you go to work to make your living than you pay if you get your income from savings or rents and other investments. Why is that? Well, the difference is, of course, national insurance. There is no national insurance on savings, rents and other investment income. we could have what is called an investment income surcharge. And again, we had one for a long time. It disappeared in the 1980s. It was 15% extra tax on investment income above a certain amount. Now, I might exempt pensioners, or at least exempt them for a lot of the tax, because of course they do live off investment income. But for the rest of the population, maybe we should be paying 15% extra if we have investment income of more than $5,000 a year. And you've got to be pretty wealthy to get investment income of $5,000 a year. So my point is there are better taxes that we could raise more easily, more straightforwardly, at less cost and quicker than would be the case if we had a wealth tax. So give me a choice and I'll say no to a wealth tax, but more reform to taxes on the income from wealth, because that will deliver what we need. Thanks a lot for watching. Please click the subscribe button below. Look at our other videos on tax issues. There will be plenty more to come. And if you enjoy this, as I say, either look at the subscription or look at my blog, Tax Research UK, or follow me on Twitter at Richard J. Murphy. Thanks a lot.